Hi everyone, and welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's Forex forecast, we're going to talk about the Euro USD. I'm going to discuss the Pound USD. We're also going to look at the Euro versus the Pound, as well as the Pound against the Canadian dollar. I'm going to show you what the Pound needs to do against the Canadian dollar in order to see a reversal higher this week. And last but not least, we're going to talk about what gold sell-off from 1536 means for the metal and why it could be heading lower this week. So you're going to want to stay tuned. We're going to do all that right now. Before we get started, be sure to hit the subscribe button below and also click the bell icon so you get notified every time I post these videos. Starting with the Euro USD, you can see that the pair is resting right on key support to start the new week. So we have the 109.30 level, which acted as support on this candle as well as this candle. And I wrote about this one last week and even did a video. And I also pointed out this longer descending channel that extends back here to 2018. So notice that we have this candle back here as well as this candle here. Now, as of last week, the pair is bouncing right from that level. In fact, last week's video, I even said that 109 would likely serve as support. And Friday's candle was actually 4 pips above 109. So sure enough, the pair did bounce on Friday, and it even closed back above that 109.30 level. So again, 109.30, actually it's 109.26 is the exact price, but 109.30, 109.26 was support on these two candles. And notice how Thursday's session closed below that level, but then Friday closed back above it. So now the question is, do buyers come in here this week and support the Euro USD above that 109.26, 109.30 level? To find out, we're going to have to watch how the Euro reacts to that 109 to 109.30 area. If we see buyers step in and support the pair from here, and we start to see that move higher and take out Friday's high, followed by Thursday's high, we could see another run up here to 109.90. So I mentioned this one a couple times last week as well. You can see that we have candles through here where it acted as support, and then Wednesday's candle closed below it. So if we do see a move higher this week, I do expect sellers to come out around 109.90 with a close above that, targeting this descending channel top up here around 110.30, maybe 110.40. Now, if we do see the Euro USD take out that 109 area, we could see the pair trend lower toward 108.50. So I mentioned this one in last week's video. It was a key factor back in 2017. And I do think that if the Euro USD tests it over the coming weeks, that it will attract buyers. But again, I think that sellers have to be careful here as long as this 2018 channel support is intact around 109, because I do think we're going to see, just like Friday, we could see bounces around this region. And last but not least, I had a few of you asking why I was trying to buy the Euro last week. In other words, why I was bullish the Euro. And the fact is I'm not bullish the Euro. In fact, longer term, I am bearish, and I have to be based on what's happened here over the last couple of years. So we have this longer term downtrend that is still intact. We had this aggressive sell-off back here, and then we've sort of chopped sideways for quite some time. However, the trend is still bearish. But just like I mentioned a couple weeks ago, as long as this broader descending channel is intact, I have to respect the potential for a bounce higher from that 109 area. And even if we do get a break below 109 and test 108.50, I still have to respect the potential for a move higher before the next leg lower can begin. And again, it's just based on this price action that we've seen now for the last year or two. And that doesn't necessarily mean that I'm bullish the Euro or that I'm buying the pair, but I do have to respect the price action that's in front of me. Next up, we have the British pound versus the US dollar, or the GBPUSD. And this one's interesting because it is sitting at key support to start the new week. So this 122.90 level, I've mentioned a couple of times recently, you can see how it acted as support following that September 4th breakout. And I talked about this candle right here on the blog, and I said that this 123.80 area was our first target. The second target was 125.70. So both of those have been reached, and since then we can see that the pound has come off of those quite aggressively. Now, this 122.90 area needs to hold that support in order for buyers to have a chance this week. If we see the pair start to close below it, then I do think a move down here to 121.70, notice these highs through this region, this area could become a factor if we see a close below 122.90. Now, on the other hand, if we see bullish price action form from 122.90, so in other words, let's say we get a bullish pin bar at some point this week, then I do think we could see a return to 123.80 and perhaps even a run at 125.70 again. But remember that the GBPUSD would need to get above 123.80, so we would need to see a daily close above this area in order to see a return to 125.70. So it's all going to come down to what happens here at 122.90 this week. And as of right now, it's a tough call because we don't have bullish price action, and the pair did close right at 122.90, maybe even a few pips below it. Lastly, you all know how I love to use channels, and I do think that there is a short-term ascending channel here that could become a factor. So if I take my channel tool and draw from these highs through this area, and I drag that level lower from this swing low down here, okay, so I've got these highs through this region as well as this high up here, and I'm connecting it with this low down here. Now, this area through here around 122.40 could become a factor this week. So let's say on Monday or Tuesday, we get a drop, an intraday drop down here into 122.40. I do think that buyers could come in here and support the pair. And that's just based, again, on this short-term ascending channel. Now, there's no guarantee that will happen, but it is something I'm keeping an eye on. And as long as the pair stays above 122.90 on a daily closing basis, I think that we still have to respect the potential for another run higher. Now, that's not to say it will happen, but I do think there is the potential for it. Alternatively, a daily close below 122.40, so below this channel support, would expose, again, that 121.70 area, and a close below that would expose these two lows back here around that 120.15 region. I've written about the euro versus the pound a few times over the last few weeks, and the first one was about 3 weeks ago when I noted this potential topping pattern back here. And you should watch last week's video in order to get an idea of why I thought the pair was topping out there. And our target for that run was actually 89.20. So our target was through this area based on this low here, this low, as well as these highs. And that target was reached back here, which we got short just below this 91.80 region. However, if you recall from last week's video, when the pair was trading in this region down here, I mentioned that I did not want to sell the pair because of this short-term descending channel and the fact that the euro pound had been sliding just above that level. So I felt that any downside was limited there. And notice how that Friday candle was never taken out last week. So the pair started to carve these higher lows followed by higher highs. And I also wrote last week that a retest of this 89.20 confluence of resistance up here was likely. And if the pair got above 88.40, then a run at this 89.20 was even more likely, and you'll notice that that did happen. So for the coming week, I'm going to be keeping a close eye on 89.20 and what happens in this area. So notice we have a confluence of resistance, which is this descending channel top, as well as these lows back here. So remember that this was our target when we were getting short up in this region. So I do think that any bearish price action from 89.20 could provide an opportunity to get short for a move back down to 88.40 and perhaps down here to 87.60. So that's what I'm watching for this week. Now, if we do get a daily close above 89.20, then I do think the short idea is negated and it would expose 90.15. So notice that we also have lows through this area as well as some highs. So based on Friday's aggressive rally, relatively aggressive rally, I would be inclined to kind of stand aside and watch what happens here. If we do get bearish price action, I'll look to short the pair. However, I'm not in a hurry to sell the euro pound. Again, because Friday's rally was relatively aggressive. But regardless, I do think that the euro pound is one to keep an eye on, because whether or not we get bearish price action from 89.20, okay, so we get a bearish price action and a move back down to 88.40, perhaps 87.60, or we get a daily close above this area and a return to 89.20 as new support, there's going to be an opportunity here. I think either way. So either we get a daily close above it for a move higher, or we get bearish price action from that area for another leg lower. But either way, I think the euro pound could provide an opportunity this week. So it's one I'm certainly going to keep on my watch list. Next up, we have the British pound versus the Canadian dollar. This is one that I mentioned when the pair was trading through this region. So notice the consolidation that occurred right below this neckline. And I wrote about this one back when the pair was trading through here, noting that it was close to a breakout. And the reason I thought that is because of these higher lows into this neckline resistance. And sure enough, we got this massive rally. Now, the pair did top out around 166, maybe 166.10, and that was another level that we did have our eye on. So notice this bearish rejection candle right here. And this hinted at a pullback into 164.30. And we got that, and we also had a daily close below it on Wednesday. That exposed this neckline as support once again. So in case you missed the forecast from a couple weeks ago, what we were watching was this left shoulder, the head right here, and the right shoulder. So this is still an inverse head and shoulders pattern as of right now, but that 162.50 area, so right where Friday closed, that needs to hold as support. If buyers can't hold this and the pair starts to close below it, we could see another run at these lows through this area. But if we do see bullish price action or a pop higher this week, I think that we could see a return to 164.30 and perhaps 166. But again, it's all going to depend on what happens around 162.50. As for what I'm doing here, I think the best approach to the pound against the Canadian dollar is to stand aside and see what happens around that 162.50. If on Monday or Tuesday we were to get a bullish pin bar of some sort, then I do think that could provide a favorable buying opportunity back to 64.30. But again, based on the way this thing is pulled back, look at how aggressive this pullback has been. I do think right now sellers are in control. So until I see a sign that buyers are ready to take over, I'm going to go ahead and stand aside, because there is always the chance that we get a close below that neckline. Furthermore, don't forget that the GBPCAD is still in this longer term downtrend. So longer term, the pair is still making lower highs and lower lows. So this formation that we're looking at right here is actually a short-term pattern. So even though this may provide another move up to 64.30, perhaps 6600, and maybe even the objective up here at 68, this entire pattern is still a short-term formation. So the longer-term trend here is lower, so keep that in mind as well. Last but not least, we have gold, or XAUUSD. This one so far has played out perfectly for us. So I wrote about this inverse head and shoulders and also included it in last week's video. And what we were watching for on Tuesday was a rejection from 1530/40. So this sell-off actually occurred right in the middle of that area. And there were a couple reasons I was looking for a rejection from the 1530/40 area. So if I move out to the weekly time frame, you'll notice that this bearish engulfing candle right here, the 50% of that candle actually came in right around 1520, maybe 1530. So right through here. Notice where the 61.8 is though. That is the exact high of that rejection that we saw last week. So that was at 1536. So that's why I was watching for a rejection from 1530/40. So we got that rejection, and we're also now sitting just above that neckline support. So on Friday, we saw gold bounce right from 1490. And that's the level that I mentioned in last week's video. So notice that we have this low right here, as well as several lows through here that make up that neckline support. Now, as long as last week's high at 1536 is intact, I favor a move lower. And that's because we still have this head and shoulders reversal pattern that's playing out. So if we see a close below the neckline support, it's going to expose that 1450 area that I mentioned last week. And again, the objective here is still 1410. So in last week's video, I mentioned why this was so significant, and that's because of these lows through this area. The other reason that 1410 is so significant is, again, back to the Fibonacci tool. This is the year-to-date range. So this low back in here to this high, this is the year-to-date range. And notice how the Fibonacci levels line up with our key levels. So 38.2 lines up perfectly with 1450. And that 50% retracement, which we know markets love to test, is around 1410. Even 61.8 lines up pretty close with these lows through this region. So again, I do think that if sellers can get through this neckline support up here around 1485, maybe 1490, if they can close it below this level, we could see a run down toward 1450 with a break there targeting that objective around 1410. However, if we do see a bounce higher this week, because remember, anything is possible, if we do see buyers take out last week's high around 1536, then this pattern would be negated. But as of right now, as long as that high at 1536 is intact, I do favor a move lower from gold as long as sellers can break that neckline this week. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.